Hey everybody, hope you're doing good. My friend Alex has this beautiful listing in Panama City Beach, and as many properties are, they're sitting a little bit longer than normal. So I wanted to go over maybe a couple of reasons on, especially why in this particular price point for investors and second home buyers, why we might be seeing a little bit more of a delay in that. So on this, I have just investor options on this mortgage analysis. So the first two columns are going to be full qualify loans, full debt to income ratios, assets, reserves, XYZ, everything has to qualify. Where the last two columns are the DSCR, the debt service coverage ratio loan, where we're really just using the market rent analysis and making sure that that equals our principal, interest, taxes, and insurance to be able to qualify those. So on the first two, those interest rates, they don't look too bad, around 6 and an eighth, whereas we got a 6.99 on the DSCRs. But I want to point out something really specific here. The amount of points it takes right now for these investor products to be able to get these are pretty significant. A little over 5 points on buy downs for these two scenarios, whereas the DSCR loans, those are a lot cheaper. Let's keep in mind the maximum seller concessions that we can get on investor products is going to be 2% paid by the seller. So we can see what our cash to close differential, what our payment differential might be. This last column on the DSCR, which is a really nice benefit of this particular program, is it does offer an interest-only option, which can keep cash flow and other out-of-pocket monthly cost a little bit lower and help that scenario. On this one, we're going to look at a buy down on a second home purchase. Because let's be real, if you're buying that house, you might say you're going to live in it, but chances are that's going to be an investment property they're trying to cash flow, or maybe a second home that maybe they rent out part of the time while they're not there. So what I want to show here is right now we're listed at 1.15. We're 30 days in. Maybe we're starting to consider a price reduction. So these first two columns are going to show what that current list price and what a $40,000 price reduction really does to that mortgage. Not a whole lot. What is that, about $200 maybe in payment difference, and not a whole lot in cash to close difference for that matter, because we're just financing a little bit, $32,000 less. If we still got full asking price and we offered a $40,000 seller buy down versus doing a price reduction, well, see, that's going to reduce our cost significantly on the monthly, making it for the buyer look like they can, for the same payment wise, they'd be buying at just under $1 million. So we'd be using the $40,000 in the seller buy down to create a wash on the points to reduce down to the 4.875 on the interest rate. Just another way or an option to maybe not have to reduce your purchase price to make less commission to do that, but to be able to provide a huge benefit for the buyer and a scenario where now maybe they can afford it, whereas priorly they couldn't, if priorly is even a word. But either way, have a wonderful day. If there's any specific questions or that you have on this listing or this scenario, or maybe a listing that you have that's been sitting, be happy to help. Take care.